Welcome to Rua Perfect classes. In this video, I will discuss about introduction to accounting. Now, first of all, you have to keep in mind that what is accounting. What is accounting? Accounting is a systematic process of recording, classifying, summarizing, analyzing, and interpreting the financial transactions and communicating the results to the user thereof. Now, first, accounting is a systematic process of recording. What recording? Recording means day-to-day transactions which will be happen in real life. Those transactions will be recorded in a bookkeeping, but those transactions should be recorded in a systematic way, means date wise. We have to record it daily happening transactions, whether they are related to cash or non-cash. When we recorded those transactions in a book, that book is known as bookkeeping. And in book, we recorded those transactions. They will be recorded both sides. Means we should be think about whether we paid cash or we receive cash, whether we give goods or receive goods, whether goods come in business or out from business. We should be think about both sides effect of daily transactions. That's why we know it is double entry bookkeeping, because it gives you two sides effect. And in accounting language, we call it debit and credit side. Debit means take, credit means give. Those things come in business, that should be debit. Those things goes from business, that is known as credit. And those transactions should be recorded in a credit side. Which comes, that should be recorded on debit side. Which goes, that should be recorded on a credit side. And all these type of transactions recorded in a journal. Means when we say that accounting is a systematic process of recording. That means we are recording the transactions in a journal. And after journal, we prepare ledger accounts. That means we are classifying all transactions in a ledger. And each and every transactions have their own accounts. Means purchases account different, sales account different, drawing account different, capital account different, assets account different, ledgers account different. That is the classification of transaction. After that, when we summarize of all ledger accounts balance, that is known as trial balance. And after analyzing trial balance, we prepare trading and profit and loss account. That is known as final account. And after this, we prepare balance sheet and we interpret the results of your business, whether you earn profit or loss. You have liabilities or assets. All these things are done in accounting. Bookkeeping is starting point, accounting is a ending point. And you should keep in mind definition of accounting, that is accounting is a art of recording, classifying, summarizing in a significant manner and in terms of money, transactions and events which are in part of at least of financial character and interpreting results thereof. Means we will record all those transactions which are in the form of money. According to American Institute of Certified Public Accountant. According to Smith and Asborne, accounting is the science of recording and classifying business transactions and events which primarily of financial characters and art of making significant summaries, analysis and interpretation of those transactions and events and communicating the results to persons who must take decisions or form judgment. According to American Accounting Association, accounting is the process of identifying, measuring, communicating economic information to permit informed judgments and decisions by users of information. Now, how to identify financial transactions and events? Accounting records only those transactions and events. Accounting records only those transactions and events which can be measured in terms of money, and it involves to identify those transactions, those events which are the part of economic activities. Example, purchase of raw materials or goods, sale of finished goods by a firm. Second point, measuring identified transactions. Financial transactions and events which are measured in terms of money. An event and transaction which cannot be measured in terms of money, they cannot be recorded in books of account. For example, quality of management, appointment of a manager, these are not recorded in the books of accounts. Third point, recording. Accounting is the art of recording business transactions in the books of accounts. Recording is the process of recording those business transactions which are in form of money. They can be recorded in the books of original entry book, that is known as journal. Now next point is classifying. Classifying is the process of grouping those transactions, those entries which are one nature at one place. And these transactions should be recorded in a journal or subsidiary books which are classified or posted in main books of accounts, that is known as ledger. Summarizing. Summarizing is the presenting classified data in a way which is understandable and which are useful for the internal as well external users of financial statements, and this process known as preparation of trial balance. From trial balance we will prepare trading and profit and loss account and balance sheet, that is also known as final account or financial statements. And analysis and interpretation means analysis is the concern with the establishment of relationship between various items which are taken from the profit and loss account and balance sheets or both. Interpretation means it is concerned with explaining meaning and significance of relationship which are established by the analysis. Analysis and interpretation of business data, these are carried out so that users of financial data, they can make a meaningful judgments of profitability and financial position of business. Communicating means finally at the end accounting function involves communicate the financial information who required, whether they are internal users, they are external users, your shareholders also. Accounting information should be provided in time to users so that they can take correct decisions at a correct time. These are the main features, main characteristics of accounting. First, we should be identify those transactions which are which are measured in the terms of money. Then after that we should be measure all those transactions which we should be recorded in the books, that is known as journal. And after that we should be classify those transactions in the form of ledgers. And after preparing ledger account we will be summarize all these balances of ledgers account in the trial balance. And after making trial balance we will prepare the trading and profit and loss count so that we can find out the net profit or loss. And after that we will prepare balance sheet so that we can know that we our financial position of business is where is our final position of business, where we standing, what we have or what we have not. That all these things will be decided on the basis of the final accounts or financial statements. Now what are the main objectives of accounting? Main objectives of accounting. First objective, to maintain accounting records. Accounting records. Second objective, to determine profit or loss. Then to determine financial position. Financial position. And fourth objective, to facilitate management. And after that, to provide accounting information to users. And then to protect business assets. Business assets. First is to maintain accounting records. The first main objective of accounting is that to record the financial transactions and events of a organizations in books of accounts in a systematic way, so that they can follow the principles of accountancy. And after that, second objective is to find out the profit or loss from your business. You can say another objective of accounting is to determine whether during the accounting period firm has earned profit or loss. For this purpose, we have to make a statement that is known as the income statement, that is also known as trading and profit and loss account, which is prepared. And from this statement we will find out net profit or net loss. And after that, third main objective of accounting is to determine the financial position. And financial position will be determined from the balance sheets, and which is relevant for the users of financial statements, as is the income statement, profit and loss count in case of companies. And after that, to facilitate management, the management often needs financial information for decision making, effective control, budgeting, forecasting. So accounting provides financial information to help the management in determining the functions of business. To provide accounting information to users. Yet another main objective of accounting is to provide accounting information to users, whether they are internal or external of organization, who analyze them according to their requirements. And sixth main objective, to protect the business assets. Accounting maintains the record of assets which owned by business, and which enables management to control and protect them. These are the objectives of accounting. Now next is functions of accounting. Functions of accounting. First is to maintain systematic accounting record. Systematic accounting record. Second function of accounting is to prepare financial statements. Third, to meet legal needs. Fourth, to communicate the financial information. Fifth, to help to the management. Now first function of accounting, first point is to maintain systematic accounting record. The main function, the primary function of accounting is to maintain systematic accounting records of financial transactions and events. Second one, to prepare the financial statements, you can say to prepare the final accounts, you can say trading and profit and loss count and balance sheets. Both statements are very important for all the users for taking decisions regarding they have to invest in business or not, etc. To meet the legal requirements, accounting records are accepted as a evidence by the court of law if they are maintained systematically and they follow the accounting principles and concepts. According to law, Companies Act, Income Tax Act, GST Act requires the submission of returns in the form and period as is prescribed in the law. The returns can be submitted if accounting records are maintained systematically and timely. Next is to communicate financial information. It's another function of accounting to communicate financial information to users, whether they are internal users or external users, like management, banks, employees, government authorities, etc., so that they can take decisions. And to help to management often requires financial information which is provided by the accounting records and which also helps in helps the management to take the decision for regarding the assets, liabilities and net profit or loss of the business. These are the functions of accounting. Now what are the advantages of accounting? Advantages of accounting. First advantage, it provides financial information. It provides financial information about business. Second one, it helps to management. Helps to management. Third, replaces memory. It facilitates comparative study. Comparative study. It facilitates settlement of tax liabilities. It facilitates loans, evidence in court. It facilitates sale of business. It helps in event of insolvency. It helpful in partnership accounts. And it also, we can say that these are the advantages of accounting. First, financial information about business means financial performance during accounting period, that is a profit which is earned or loss which is incurred, and also financial position at the end of accounting period is also known from accounting. And accounting also helps to management to makes the business plans, to takes the decision, to exercise the control on the basis of accounting information. Replaces memory means it is a systematic and timely recording of transactions and which is necessary to remember transactions, and accounting record provides that information. Facilitate comparative study means a systematic record enables the comparison of one year's result with those of other years, and you can identify factors which are leading to change, if any. It also facilitates settlement of tax liabilities, means it also helps in settlement of income tax and goods and services tax liabilities, because it is a good evidence of the correct recording of transactions. Next is a facilitating loans. Loan is provided by banks and financial institutions on the basis of growth of the business, and this information is provided by the accounting to banks or financial institution whether business can return their loans or not. Evidence in court means it is a systematic record of transaction in which is accepted by courts as a good evidence. Facilitates sale of business means if someone wants to sell his business, then accounts maintained by him will enable the ascertainment of the proper purchase price, and it also helps in evidence of the insolvency. Insolvency proceeding involve explaining many transactions whether they have taken in a past or not, and systematic accounting records also helps a great deal in the such situation, and it also helpful in partnership accounts. These are the advantages of accounting, but where advantages there are also some limitations of accounting. Limitation of accounting. Limitations of accounting. First, it's not fully exact. It's not fully exact. Means accounting is not fully exact. In spite of fact, transactions are recorded on the basis of evidence, because at few places estimates are made for finding profit or loss. For example, if we want to we estimating the useful life of an assets and the net realizable value of closing stock, etc. Second, unrealistic information. It provides unrealistic information. Assets which are recorded on the basis of books of accounts at the past cost, historical cost, and depreciated over their estimated useful life. As a result, current values are not known, not shown. An estimation of useful life of an asset, it makes the information unrealistic. Third limitation is it ignores qualitative elements. Qualitative elements. Ignores means accounting statements is confined to monetary matters only. It cannot record the qualitative informations. Means quality, skills of management, staff, industrial relations, public relations, they all should be ignored. Accounting also ignores the effect of price level changes. Price level changes. Ignores. Accounting statements are prepared at historical cost. Money as a measurement unit changes in the value frequently, does not remain stable. So, accounting always presume that value of money remains stable. Unless price level changes are considered, accounting information will not show correct financial results. Accounting may lead to window dressing. Lead to window dressing. Means the term window dressing means changes of accounts in such a way that vital facts are concealed. Important facts are concealed, not shown, and presenting financial statement in a better position than actual. In this situation, we can say income statement does not show correct profit and loss. Balance sheet does not give true and fair view of the financial position of business. These are the limitation of accounting. Now, next point is role of accounting in business. First role, maintenance of systematic record. The role of accounting is to maintain systematic records. Second role is to help to the management. Third, to facilitate comparative study. And to provide proof in court, etc. These are the role of accounting in business. Now, next point, that is accounting process. You should keep in mind that accounting process in accounting process, first of all, what we do, identifying means identification of transaction, and events which are happening daily. Second, what we do, next step, we do recording. After that, we do classification in ledger form, and after that we will summarizing in the form of trial balance. And after that, what will we do to prepare profit and loss account, trading and profit and loss account, and balance sheet. On the basis of trading and profit and loss account and balance sheet, we will analyze and interpret the results of business and then communicate to the internal external users so that they can take decisions regarding their investments, whether they have to invest in business or not. You should keep in mind, in summarizing, we should prepare 3 accounts: trial balance, trading and profit and loss account, then balance sheet. And in financial transaction and events, we will prepare journal, cash book, purchase book, sale book, purchase return book, sales return book, bills payable book, bills receivable book, and journal proper, etc. And in classifying, we posting all the entries from journal to ledger. Now, next, what will be the relationship between bookkeeping, accounting, and accountancy? First of all, we will prepare bookkeeping. Then we will prepare accounting. And after that comes accountancy. You can say bookkeeping is a part of accounting. Accounting is a part of accountancy. The relationship between bookkeeping, accounting, accountancy is like this figure. From bookkeeping we prepare accounting, then accountancy. Bookkeeping and accounting both are considered same and both are used interchangeably, but these two terms are different from each other. Accounting is a wider term than bookkeeping, and it includes bookkeeping. Bookkeeping is a part of accounting and it is a process of recording financial transaction events in the books of accounts, and bookkeeping involves to identify the financial transactions and events to measuring them in terms of money, and after that after identifying the financial transaction and events in the books of accounts we will record, and after that we classifying all recorded transaction and events into ledger account. Bookkeeping is a art of recording in the books of account monetary aspects of commercial and financial transaction. This is the definition which is given by Northcote. According to J.R. Batterboy, bookkeeping is the art of recording business dealings in a set of books. According to R.N. Carter, bookkeeping is the science and art of recording correctly in the books of accounts all those business transactions and results in the transfer of money or money's worth. Now, what is accounting? Accounting is the process of identifying, recording, classifying, summarizing, analyzing, interpreting, communicating financial transactions in a understandable way. So we can say accounting is a wider. Accounting is a wider than bookkeeping, and accountancy is wider than accounting and bookkeeping. And now what are the difference between bookkeeping and accounting? First point you should keep in mind that scope. Bookkeeping's scope. Bookkeeping is the process of identifying financial transaction and events which will be measured in the form of money, and all these transactions is recorded in the books of account and then classifying. But in accounting, from bookkeeping we will prepare trial balance, trading and profit and loss account and balance sheet, that is the accounting, and communicate the results with the users. In bookkeeping, first stage, bookkeeping is the first stage. On the basis of bookkeeping we will prepare accounting, so that's why accounting is the second stage. Main objective of bookkeeping is to maintain systematic records of financial transaction and events, and in accounting the main objective to prepare trading and profit and loss account and balance sheet so that you can find out the exact financial position of the business and you can communicate that information to the users who wants that information. Nature of job in bookkeeping, that is routine, because we will record all transactions daily basis. In accounting it will be analytical and dynamic type nature. Performance in bookkeeping, bookkeeping is routine work, So it can be performed by or not so trained staff. But in accounting, it is prepared by specialized staff, trained staff. Bookkeeping is mechanical in nature and it does not require any special skill. But accounting requires special skill because ability to analyze and interpret the results only by trained staff. So this is a accounting. Now what is accountancy? Accountancy is also systematic knowledge of accounting and which is an educating process whereby different types of aspects of accounting which are explained with the reason, how to maintain the books of account, how to summarize the accounting information, how to communicate to the users. And according to the Kohler words, we can say accountancy refers to the entire body of the theory and practice of the accounting. Accounting and accountancy. What will be the difference? Accounting Accountancy is the knowledge, while accounting is the action or process. You can say accountancy is knowledge and accounting is a action or process. Accounting process which is carried out on the basis of rules and principles. There are some golden rules which are followed by all accountant for making the accountancy, framed by the accountancy. It may be said that accountancy is the knowledge of accounting and accounting is the application of accountancy. Accountancy. Now, what are the difference between accounting and accountancy? Accounting is the application of accountancy, but it is work after completing bookkeeping. Accountancy include theory, principle, system of accountancy, why, how financial transactions are recorded. In accounting, we can say it is a secondary stage, but starting stage is a bookkeeping. Means where bookkeeping ends, then accounting starts. And on the other side, when accounting completes, then accountancy start. Accounting depends on the bookkeeping. Accountancy depends on the accounting and bookkeeping both. Accounting analyzes the financial statements which is which will be made on the basis of bookkeeping. While on the other side, accountancy is a methodology to record the transactions and analyzing financial statements which are prepared by process of bookkeeping. That is known as accountancy. Now next topic is accounting information. According to accounting principle board, according to accounting principles board, accounting is a service activity. Accounting is a service activity. Its function is to provide qualitative qualitative information, primarily financial in nature, about economic entities, that is intended to be useful in making economic decisions. You can say, what is accounting information? According to Accounting Principle Board, accounting is a service activity which provides the qualitative informations, which provides primarily financial in nature information about economic entities, which is intended to be useful in making economic decisions. What are the types of accounting information? We can get information relating to profit and loss, whether we earn gross profit, gross loss, net profit, net loss, by preparing the trading account, profit and loss account. We can find out information about cost of goods sold, direct or indirect expenses which are varying by the firm, and in this we also prepare the profit and loss account by a company according to schedule 3 part 2 of the Companies Act 2013 to determine the net profit or net loss. A not for profit organization also prepare income and expenditure account for deciding surplus or deficit. Surplus is related to net profit and deficit is related to net loss. Second type of accounting information, that is information relating to the financial position. The financial position, the position statement, that is balance sheet, which makes available information about financial position of the entity or business or organization. It provides information about assets which are owned by the entity, amounts which receivable, cash, bank balances which held by it, and these also represented in the liabilities by amounts which owed by the entities towards the loans, creditors, amounts payable, capital, etc. It also provide the information about cash flow, means we will prepare cash flow statements which shows how much money flow in form of cash, means when money comes in business, that is inflow, cash inflow. When money goes from business, that is known as cash outflow. All these things are prepared through the cash flow statements, and we will know about inflow and outflow of cash during a specific period. And we can take these information for deciding many type of decisions, like payment of liabilities, payments of dividend, payments of expansion of business, expansion of business, etc. All these are based on the availability of cash, and all these type of information is accounting information. And accounting information refers to financial statements which are generated through the process of bookkeeping, and use of which we helps the users to reach at a decisions. And financial statements so generated as a income statements, profit and loss count, position statements like a balance sheets, and all these informations made available by these statements. These are the accounting information. Now next point is qualitative characteristics of accounting information. What is the qualitative characteristics of accounting information. Main point of qualitative characteristics of counting information is true and fair result. Qualitative characteristics are attributes which make accounting information useful to users. Such type of qualitative characteristics: first, reliability. Reliability. Accounting information should be reliable because reliability of information means it is verifiable, it is free from biasness, it is material error free. Second, relevance. Accounting information should be relevant to the user. Information relevant if it meets needs of the users in decision making, then information will be relevant. Understandability. Understandability. Understandability means information which is provided by the financial statement that should be presented in a way that users can easily understand it. Comparability. Comparability means users should be able to compare the accounting information of an enterprise, of an organization, of an entity of the period either with that of other periods. That is known as infra-firm comparison. Sorry, intra-firm comparison, or with the accounting information of other enterprises, that is known as inter-firm comparison. When we compare information within firm, that is known as intra-firm comparison. When we compare with other enterprises, that is known as inter-firm comparison. Now, next point, users of accounting informations. Who are the users? Users of accounting information. Owners. Second, management. Third, employees or workers. Fourth, banks and financial institutions. Fifth, potential investors. Sixth, creditors, government and its authorities. Eighth, public. Ninth, researchers. First two are internal users. Others are external users. First is owners. Who is owners? Owners are those persons who invest capital, who contribute capital in the business, and who bear the maximum risk and get maximum reward. That is known as owner. Who is management? Management includes a person who are involved in making strategy, policy decisions, as well as running day to day operations. Now, external users, employees and workers. These are those people who work for an enterprise, and they get wages, salaries, bonus, etc. as a remuneration. Banks and financial institutions, these are those institutions, those organizations who provide the loans to business enterprises. Potential investors are those people who wants to invest in the enterprise. Creditors, creditors are those people who supply goods and services on credit to enterprise. They assess financial position from final accounts. Government and authorities, various government bodies, authorities use accounting information to arrive at various statistics which enable policy decisions. And public in general is also interested in financial information of an enterprise. Researchers are those people and organizations who use the accounting information for research on the various accounting practices. These are the users of accounting informations. Now, next is systems of accounting. There are two types of system of books of count. First is single entry system. Single entry system, and second type is double entry system. In single entry system, we can say accounts from incomplete records. Single entry system of recording transaction in books of accounts may be defined as incomplete double entry system. In this system, all the transactions are not recorded in double entry basis. In some transactions, both aspects of transactions are recorded while others not recorded. And in this, we cannot maintain all accounts properly, whether they are related to personal accounts, cash books accounts, or etc. And these type of accounts are not reliable, not systematic, not complete, because all transactions are not recorded in the system on double entry basis. Trial balance cannot be prepared, profit and loss count and balance sheet cannot be prepared from single entry system. But on the other side, double entry system, it is the system of accounting which records both aspects, debit and credit of financial transactions. At the time of recording transactions, one aspect is recorded on the debit side and other recorded on the credit side. For example, purchase goods of rupees 1000 from ABC company on cash. What will be the entry? Purchases account debit to cash. This is the debit side, this is the credit side. and entry will be recorded on both sides. This is the journal entry. Here we will write date, and here we will write narration. In short, what will be happen? When we purchase goods for cash, goods acquired, and in return cash is paid. So that's why when we pay give the cash, so that's why it is credit. Credit means give. Purchases count debit because debit means come, take. But we will take goods. When we takes the purchase the goods for the reselling purpose, then we treat as a purchases. So that's why we will write here purchases account. What will be the features of double entry system? It maintains complete record of each transaction. It records two sides aspects of every transactions, debit and credit side. And in this system, one aspect is debited, other side is credited. And one aspect of transaction is debited, other side is credited. The total of all debit is equal to the total of all credit side. It also helps in maintaining the arithmetic accuracy by preparing trial balance. Stages of double entry system. It records transaction in journal, then classify transactions from journal into ledgers, and then prepare the trial balance. After that, closing books, prepare the final accounts. All these stages are included in the we will study in next coming videos. Advantages of double entry system. First, it is a scientific system. It gives the complete record of transaction. It ensure the arithmetical accuracy of accounts. It determines the profit and loss account, and it ascertain the financial position of business. It also gives the details of purpose of control. It also provide the possible comparative study. It also helps the management to take the decisions, and it also detect the frauds and misappropriations in business. This in this video I have discussed all important points of accounting. This is the chapter of introduction to accounting. I have discussed meaning, definition of accounting, what are the characteristics of accounting, what are the objectives of accounting, functions, advantages, limitation, role of accounting in business, and what is the accounting process, branches of accounting, bookkeeping, accounting, accountancy, accounting information, their types, qualitative characteristics of accounting information, and users of accounting information, then system of accounting. If you like this video, please like and share my channel with your friends so that they can take benefits from these videos and upcoming videos.